Liz Knight, continuous explosions. Magellan chief executive exits with a bang. We're sorry, this feature is currently unavailable. We're working to restore it. Please try again later. The Sydney Morning Herald. The Sydney Morning Herald. Sections. Network. Advertisement. Business. Companies. Executive shake-up. Opinion. Continuous explosions. Magellan chief executive exits with a bang. Elizabeth Knight. Business columnist. Save articles for later. Add articles to your saved list and come back to them anytime. Advertisement. Magellan is suffering from a corporate identity crisis. Last year's decision to put staid and steady cardigan-like chief executive David George at the helm of a company with entrepreneurial DNA is an experiment that hasn't worked. After 17 months, George has left the building and the new chairman, Andrew Formica, is on the hunt for a replacement, capping off 3 years of turbulence for an organization that continues to bleed funds under management. New Magellan chairman Andrew Formica has taken the reins as CEO on an interim basis. Credit, Louis Duvas. Magellan's recent history is one of fresh starts, but most could be characterized as false starts. Formica barely had his bottom on the chair's seat vacated by Hamish McLennan when he clearly made the decision that fresh chief executive blood was required, and immediately. Until a replacement chief executive is found, Formica will do double duty and become the executive chairman. It is paradoxical that Formica says the key to stemming the outflow of funds across Magellan's products is to have less noise, when the shock departure of the chief executive screams chaos. Magellan was created and grew through its adolescence under the trance of its founder, Hamish Douglass, but when that blew up in 2022 and he hit the eject button, the company became culturally adrift. The organization had amassed a staff of Douglass followers, many of whom in true entrepreneurial style had taken staff loans to fund their investment in Magellan shares. It is now Andrew Formica's job to find the Goldilocks candidate to run Magellan, not too much of a rock star and not too backstage workmanlike. The collapse of Magellan's share price left many of its staff in a financial pickle and contributed to what Formica describes as stress, anxiety and morale issues in the business. These are now being addressed by awarding retention payments to help the staff with repayment of the staff loans. Advertisement. Last year Magellan opted to find the anti-Douglass in its search of stability, and they found him in George. He hailed from the Future Fund, which is the epitome of safe, considered and risk-averse, and is known for its passive equity investing. The contrast with Magellan's active big bet investment style could not have been more marked. It is now Formica's job to find the Goldilocks candidate to run Magellan, not too much of a rock star and not too backstage workmanlike. He wants someone who will keep the wheels turning but who backs the board's plans to grow the business through acquisitions rather than stabilize it. But in ushering George out the door, Formica has shown he is prepared to have Magellan move through another point of instability. It has been characterized as a mutual decision, but history shows that these moves are led by one party, and in this case it looks to be the board rather than George. While George may have not been a cultural fit at Magellan, he is highly regarded in investment circles and his departure won't be greeted well by all shareholders. Over the past year, funds under management have continued to decline. From the peak of $117 billion in late 2021, funds under management have fallen to $35 billion as of September this year. But most of this damage occurred before George joined Magellan and a large number of mandates were lost because Douglass, and more recently the head of Australian Equities Division, John Sevior, left. George hasn't really done much wrong, other than placed a target to grow funds under management to $100 million. He didn't really nominate a time frame, but as funds continue to fall, this objective looked increasingly fanciful. Magellan was created and grew through its adolescence under Hamish Douglass. Credit, Janie Barrett. Formica is against making such targets, which is probably wise. But his strategy to buy smaller competitors may not have sat well with George, given it was outside his area of expertise. That said, Formica appears to be pretty happy with Magellan's 36.4% stake in upstart investment bank Barrenjoey, despite the industry's quieter equity capital markets. But on retaining this investment, Formica is more equivocal. What they, Barrenjoey, have done in 3 years is phenomenal. For us to be associated with that is only a positive. Barrenjoey today is stronger than a year ago, and we expect it to be even stronger in a year's time, and in that sense we are a happy shareholder. Where it fits within our business is something we always have to contemplate, Formica said. But the immediate task for Magellan is to get back to our knitting, according to the now executive chairman. Clients have been through a lot in a short space of time and we know they have other options. Delivering for them is absolutely our priority. The Business Briefing newsletter delivers major stories, exclusive coverage and expert opinion. Sign up to get it every weekday morning. Executive Shake-Up. For subscribers. Opinion. Magellan Financial Group. Hamish Douglass. Share market. Most viewed in business. From our partners. Advertisement. The Sydney Morning Herald. Twitter. Facebook. Instagram. RSS. Copyright 2023.